Let me welcome on board the MD and CEO at Tata Communications, Amur S. Lakshminarayanan, joining in on the show right now. Amur, great to have you on the show. Thank you so much for taking the time out. Firstly, I want to talk about your margins because they've continuously been falling from 25.5% number, which we saw about 4 quarters back. It's now down to 21.5. Is that completely because of Switch acquisition being incorporated in the books?
Hi, good morning. No, I think the margin falling is not purely because of the acquisition. As you pointed out, in the last 2-3 quarters, the margin has been steadily falling, even though we have been delivering a 10% growth quarter on quarter, and finally for the year we delivered a 10.3% in the last financial year. And we had called out as part of the strategy now that we have our base quite strong, our balance sheet is quite strong, and we have been investing in products in a smaller way. We wanted to accelerate growth, which meant that we have to make investments. And those investments were in the form of expanding our footprint and strengthening our footprint in the markets where we serve, especially the international markets. We hired a lot of people in sales solutions in those markets. And similarly for the product development and other services, we hired people. So last year over 1,000 people were hired. And that impact you saw through the course of last year towards the end. And this year you are seeing the full impact of those people addition costs. And as we move to the digital landscape, we were also in line with the market in terms of giving increments and so on. So that has also played out in the quarter. So one is the impact of our investments that we made. The second, the impact on the margins that you see is the mix effect. So Tata Com, as you know, was largely in the core connectivity space. We said our strategy is going to be focused more on enterprises, shift ourselves to more of digital products and platforms. The digital products and platforms came with a lower margin at the gross margin level. And this was again, as per the industry norm, this is to be anticipated. And that mix effect as a proportion of core connectivity reduces and the proportion of digital revenue goes up, that puts pressure on the gross margin level. So these are the two large factors that plays out in the margin front. Now, this is exactly as per our strategy. We had called out that we want to get our digital products to 50%, and that's what we are on our way to. We are already, with this quarter, we would have reached 36% in digital revenues. And as we scale all of these, each of these digital products have their glide path to improve their margins. And therefore, we said confidently that we can hit our aspiration of 23 to 25% in the mid to long term. So we are executing exactly as per our strategy.
Couple of follow-up questions, and I don't know if you can give me this data, but what were your margins like in the first quarter, excluding Switch? And how much were Switch margins? If you could give me that breakup. And given that in the first quarter, only 2-month numbers of Switch was being accounted for, and the second quarter, the entire book is going to be merged, will margins then continue to fall?
Yeah, we had said at the time of acquisition that this company, Switch, was not a profitable company. And therefore, there would be a short-term pressure on the margin. So in fact, adding the 2 months revenue brought the margin down marginally, but that again was expected. And it will be the case until we bring all the synergies post-merger. We are only 2 months into the execution post-closure. And already we are seeing very good results in terms of our customer engagement. The pipeline as a result of combined offerings in the media business has gone up. So we are quite confident of all the synergies that we wanted this to play out. A, in the North American market, B, synergizing both our offerings, bringing the production offerings, bringing our edge and other capabilities in the media. and how we take to the market, that's already bearing fruits in terms of the funnel that we are creating. And third is the cost synergies that will play out as we start executing much more closely in the time to come. So again, while I don't want to give out a specific impact of what the switch 2 months of consolidation had an impact, it was a tiny impact. It wasn't a very big impact. Yeah.
Okay. Morning, Lakshmi. Always good to connect with you. So let's get the equation right. I don't want to get this one wrong for our viewers. You're sticking to your margin guidance of 23 to 25%. That is more like a medium term to long term vision. Define medium term and long term for us. Is it 3-year medium term and 5 years plus long term? And before that, you will struggle to reach that guidance band?
No, I'm deliberately vague about this, Nikunj, to say whether it's medium term is 3 years or 5 years. We are, we probably would want to achieve this even before 3 years. But having said that, that we have announced the Kalera deal. So these are things in motion. So if I take on a standalone basis, that I can give an answer. But in our strategy for growth, investments that we are making in our digital products, all these things will play out. But as it plays out, the impact in terms of overall to the company and to the markets and the customers that we serve are essentially our ability to switch ourselves to a Comtech player, become a lot more relevant with our customers today. For example, in our media business, we no longer go and talk about how do we provide connectivity from the venue to the production center. Right? So our conversations are more about, more integral to their business. How do we deliver that immersive customer experience that they seek to achieve? And a lot more integral with even production capabilities and production from the cloud, the edge capabilities that we bring to the table. So this motion, delivers one is a lot more relevance to customers and a lot more accelerated growth that we can get in digital. And while we do all of that, we are very cognizant of the fact that we need to make sure that the margins are in the bands that we want it to be. So, and I had called out that the margins will be under pressure because of the investments that we make. So, to your question, whether it will come back to that range in what definite period, if I was to take purely just the switch alone, we would be confident of saying that we will come back within a year's time. But now that we have also made another announcement of Kalera, that will play into that as well. So in the bit of a longer run, that we will get back. We will, our aim is to get back to the 23%.
So deliberately vague. We'll take that then, and I won't probe any more on the margins. I'm going to move right on and talk about the positive side, which is that the underlying data business, that's grown about 4% sequentially. Is this growth looking sustainable, or do you think that we could see this growth accelerating?
Well, I think your question is interesting when you say, is the growth sustainable or is it going to be accelerating as opposed to... So I think, we are extremely pleased with the momentum that we have. After 3 quarters of a 10% growth, we've been able to deliver an underlying growth of 14% this quarter, and including Switch, we are delivering a 17% year-on-year growth, which is a great momentum to have. Having said that, we want to sustain this momentum, but some of the macro conditions we all know is difficult to predict. While we think still there is demand out there, we see that our funnel addition last quarter has been very, very good. But at the same time, the deal closures are taking longer than what it was before. So we don't know how long that will last. So it's difficult to say how beyond a quarter to be precise about predicting where that will go is is going to be not so futile. So we are going to keep our head down, engage with our customers. We're getting excellent traction with our new articulation of digital fabric. We are getting more involved in the customers' business conversations. So all that is good news for us, and we will just keep our head down and execute on that.
Lakshmi, there is a lot of surplus land which is there in the balance sheet of Tata Communication. I'm talking about the current balance sheet is what I understand. Hemisphere Land Bank, that's been unlocked, that is separate. When I speak to some common friends, when I speak to some folks who track your company, they are of the view that you are looking at monetizing some land bank which is in Tata Communication in as soon as FY24 and not later than FY25. Is that true? If yes, what could be the value?
No, Nikunj, that's not entirely true, because as you probably know, the land parcels that we have are fairly distributed in many parts of the state, right? And many of these land banks that we have to go through the titles, and some of them are still in the old name. So we are working through the titles, we are working through the pattas, we are working through the usage for which these were given to us and bought by us. So the usage change is another aspect that we have to think through in all of these. So we are dealing with this systematically. So the simple answer to your question, will all of these be done by in the next 1 year? No, the answer is not. So we will go through this systematically, step by step.
So to wrap it up with one simple question, I'm trying to understand the business trajectory here. Exactly a year ago, the business went through a downturn. Last 2 quarters, the upturn is visible. What should we be expecting next 2 quarters? I'm purely using terminologies to capture the business trajectory. There was a drop, now there is a revival. Will there be a flourish?
Yeah, I think that's certainly what we are working towards. I think even last time in the digital portfolio, if you saw, largely the drop was because of the collaboration portfolio. While our cloud was always doing well, our security portfolio was doing well, our next-gen connectivity portfolio was just taking off at that time as well. But collaboration was the largest piece in digital. And there we had an impact, and I don't want to go through the reasons of why, because we all knew why that collaboration and the usage came down. Since then, we pivoted the whole collaboration portfolio to more of platform and services, which we call as Global Rapid, and that stabilized the degrowth that we saw previously in the collaboration. Now, for the last 2 quarters and this quarter, our customer interaction platform, which is a combination of DIGO and InstaCC put together, which helps our B2B customers to deliver superior experience to their consumers, that's the customer interaction platform. That's really taken off, and because that's growing very well, the overall collaboration portfolio has come back to the growth mode. And being the largest piece in the digital portfolio, that growing was important. So, and that's how we saw the growth revival. Going forward, from a demand driver point of view, exactly all the demand drivers, our customers moving to cloud, our customers wanting to leverage internet a lot more, poses a lot more of complexity in their infrastructure. And we come there to simplify that with our products of ISO offerings, ISO WAN and ISO SD-WAN, and with our cloud SOC and other capabilities, we simplify the whole thing for that transformation. Similarly, on the collaboration side, the connected experiences, the combination of DIGO and InstaCC, there is a lot of demand out there because people still want to interact with the consumers in a converged contextual manner. And in our connected solutions, again, we are beginning to see the traction which we saw last year in terms of the Move platform and the IoT platform. Even though they are small parts today, that was lagging behind, and that we started seeing some growth. So overall, the demand drivers are still quite valid, and our products and platforms address these demand drivers in the market. So all I would say is, as long as we stay relevant to that and execute, we will be able to grow.
Appreciate your time. Thank you so much for joining in and giving us an update on how business is shaping up.